meeting or the retirement plan for the general management employees of the city of North Miami Beach. Today is June 15th. It's 9:07. Mr. Shamoon, are you able to take attendance, call attendance?
Sure. Chair Serta?
Here.
Secretary Trinka?
Here.
Trustee DiFilippo?
Here.
Trustee Smith?
Here.
Trustee Spencer?
Here.
We have
All right.
all members.
We have quorum, great. Let's see, everybody has the agenda in front of them. Are there any changes, additions, edits, deletions, anything? All right, we'll set the agenda. First item is the board member election, is that correct? Okay, so the first one is the retiree, which the only nominee is ex-city attorney Darcy Siegel, is that correct?
That's the only nomination we received.
Okay, no other nominations, right? Okay, so we can,
Have you checked with the city manager, in reference to the nominations? I believe there was one more,
A retiree?
a retiree, yes.
And they would have had to
No,
file
they-
it.
yeah, they would have to go through
They'd have to go through the board.
or through your office.
Yeah, I mean,
not to us.
through the board, through us.
Yeah,
There was only one.
yeah, it couldn't come through our office.
There was one that responded to the last election. I heard there was someone else who would like to be considered.
Yes.
Much like Councilman DiFilippo has said, there's one other individual that has expressed an interest. So, is that something that we can consider today, or no?
As I gave the opinion at the last meeting, I believe unless somebody can show me something different, I believe that anybody who is an actual retiree can be nominated. Now, that doesn't mean they'll serve if they're elected. I don't know anything. I mean, I think we're allowed to develop a way to have nominations, but I'm not sure that there's any, I don't believe there's anything in the ordinance that says that we can only choose from people who've been nominated. And I'm certain that's what I said at the last meeting. I'm not suggesting you do that or not do that, but as a
So-
matter of law.
Are you saying that
I mean,
if we decide that we want to go with a different candidate, that we can vote on that today as opposed to having another election?
I think you can, yes.
Okay.
Paul, if I might, are you aware of anything that says that somebody
We've not
has to be
received
nominated?
anything from
No,
our
but are you
office.
aware of anything that says that somebody actually has to be nominated? I mean, I think that's a procedure we do to let people express interest, and it makes perfectly good sense. But are you aware of anything that says that they have to be?
I've never seen anything that
Yeah.
says they have to be, but I've
Yeah.
never seen a situation where they were not.
Yeah, I think that's probably my view on it as well.
I mean, typically we would receive something that they're interested in, maybe some kind of a bio on their background so the board knows who they are. And
so procedurally then, how does the alternate additional nominee come forward?
Somebody could nominate that person.
I make a motion that we nominate Gil Rosenkopf,
Second.
a retiree,
Okay.
used to work with the building official.
is it
We have a-
COFF or K?
Rosenkopf, Koff.
KOFF.
Okay. And is that requires a motion, is that correct?
I just made a motion.
That's right.
Yeah.
Okay, so been first and seconded. All in favor then of
Mr. Chairman, you should ask if there's any other nominations. Several times there's a way it should be done to see if anybody else wants to nominate somebody.
Okay. Anyone else have a care to nominate someone for the retiree board member spot?
And just, if we might, just, I'm sorry, I didn't mean to interrupt.
No, go ahead.
But just so we're clear on this, the plan, the retirement committee consists of the city manager, his or her designee, a city council member, an active member of the plan and trust, a retiree member of the plan and trust, and the city attorney. Both the active member of the plan and trust and retiree member of the plan and trust shall be chosen by the other three board members. So there's only three who get to vote on this.
Okay.
Okay? The
So-
active member and the retiree member do not get to vote on this issue.
But the board passes whether a nominee is accepted or included on the election? The new nominee, Mr. Rosenkopf? The
Well, I
whole
don't-
board?
I think that happens as a result of being nominated.
Okay.
They're considered whether, I believe that once they're nominated, they're considered. I don't think you can.
So the motion
We
is
had a
whether
motion
you're
to
gonna approve
nominate.
them or not approve them to be on the board.
Yeah, but I'm just saying you may want to get other nominations.
I got you.
Okay.
But I thought you were just saying the whole board does not vote on the motion to add the nominee, that they're just nominated. Right now, we have a motion on the floor to nominate
No,
Gil.
what I'm saying is the nomination itself, you don't need approval of that nomination.
Okay.
Somebody nominates somebody.
Okay, so then Gil Rosen, so the motion then is there
There's a
unnecessary
motion,
and
there's a
irrelevant?
And a second.
Okay. Is there any other conversation on the motion to nominate Gil Rosenkopf?
This is not a public hearing.
Anybody else? Okay. All in favor? Yes. All in favor of Gil being Mr. Rosenkopf being nominated as a retiree member, say aye.
Aye.
Aye. Any opposed? Okay, that carries. Are there any other nominees for the retiree board member position?
Well, you just put somebody there.
That's
so
it. It's
so
over.
you're done. There's no
Okay.
one else who can.
Okay.
Now you're on to the act.
What I'm saying is that you don't make a motion to nominate. You just
I understand.
nominate.
Okay, but I thought that's what okay, so the motion was not to nominate. The motion was to place the position.
Yes.
Place the individual in the position.
No, there was, somebody nominated, somebody nominated
so.
this person, okay?
Correct?
Then you voted on that, but you thought, Mr.
Yes.
Chairman, you were voting on whether or not to
That's
accept the
correct.
nomination. So I think I think the way to do it is to ask if there's any other nominations. If no other person has placed a nomination, then you vote on that nomination. If other people have placed a nomination, then you vote on whoever has placed a nomination.
Right, okay, so at this point now, we have 2 nominations, right?
No, you have
No, only one.
Where's
Yeah.
the Darcy's?
What happened to Darcy's nomination?
Nobody has made a motion to nominate her.
I'd like to
Make a
Nominated.
motion.
Okay, real quick. It requires a motion for her to be nominated?
No, it requires a nomination. Somebody just needs to say.
Isn't she automatically nominated? She's on the agenda.
She's on the list.
Has anybody nominated? Yes, okay, she's expressed an interest. You could consider her nominated then.
Not if there's
Not-
no motion.
And the retiree can't,
Can I make a motion?
If I
Sure.
might, customarily, there's not a motion to nominate. There is a nomination.
Nomination, correct.
Somebody places somebody in nomination that doesn't require a second. Once somebody's placed in nomination, their name is on the floor. So, but I'm not sure how Darcy's name got on the agenda. I think she's expressed an interest to be nominated, is how I understand what that means, okay? I believe that she needs to still be nominated. By any one of the 3 board members can nominate Darcy.
So I can't nominate.
I don't believe you can.
Mr. Shimon, wasn't there an email requesting those to be within either an interest or to be nominated to be on the board?
Correct.
Okay,
And she was the only one who had responded back with interest.
okay. So she's
I
considered.
believe actually there was 2, but then one withdrew.
No, that
I
was
don't
that was employees.
Oh, that was the employee side.
I just want to make sure procedurally we're following this correctly. That's all I want to make sure. So, right now, and perhaps attorney, you can help us out then. So, I thought we were making a motion to include it as a nominee. Apparently, the motion was to appoint.
No, I don't think it was proper, if I could, I don't think that the first motion was properly a motion. I think it was a nomination. And I think when somebody nominates somebody, their name is placed on the ballot. So I think you should treat the motion to place Mr., is it?
Rosenkopf.
Okay, Rosenkopf's name on the ballot. I think you should treat that as a nomination, and Mr. Rosenkopf's name is on the ballot. What Robert's Rules of Order says is, strictly speaking, nominations are not necessary when an election is by ballot or roll call, since each member is free to vote for any eligible person, whether he has been nominated or not. So that bolsters what I said earlier. I believe anybody who wants to vote for Darcy can vote for Darcy, or anybody else, whether they're nominated or not. It does say, in most societies, however, it is impractical to proceed to an election without first making nominations, okay? Unless a member's choice is confined to a small number of persons, voting may have to be repeated many times before a candidate achieves the required votes. So what I'm saying is you have the right, everybody on the board has the right to vote for the gentleman who was nominated.
somebody else can nominate Darcy or anybody else. Any of the, somebody else being the three on the board. This is confined, this election is confined to the three. Anybody could vote for somebody who has not been nominated according to Robert's Rules of Order. So you can vote for the gentleman that's been nominated. You could vote for Darcy. Somebody could nominate Darcy. You could vote for a different retiree if you choose to.
Okay, then I can't take an aye vote then if everybody can say a different name.
No, I
gotta-
think you should ask who they are in
Exact-
favor of. Okay, you should go, you should ask if there's any
Other
other
nominations.
nominations.
I understand. So are there, and at this point, you're saying Darcy is not considered nominated?
No, but she can be voted for.
Okay, anybody can be voted for. Okay, so are there any other nominations? And this is just to the three of us.
Yes, because let me just go back to Darcy. I'm not clear. She's expressed an interest in getting on the board, correct? Is that how her name got on the list?
Correct.
Okay.
There was he put out an email, and there was a deadline as to who was supposed to put their names in,
Correct.
and 3 people did. Only 3 people.
Would you consider that she nominated herself then?
I
Okay.
that's
No.
your opinion,
Okay,
not
I'm
mine.
sorry.
I mean,
I'm not sure what the email said.
we
Mr.
just
Fay.
basically said there's an open spot on the board. If you're interested, please respond.
All right, let's make it
Okay,
simple.
no.
Yeah.
Yes. I
Let's
think-
assume
Hold on,
that
she's not,
she is the nominee
okay.
for purposes of being
For
elected
consideration.
to this board. And so let's vote on her, and then if there are enough votes, she will be nominated. If there's not enough votes, then I will make a nomination for someone else.
You can do it that way. That's fine.
Go ahead.
When this happened, when the league sent it out, there was a lot of emails back and forth among the retirees. A lot of people did not put their names in because they wanted Darcy. Darcy had a lot of support. Dale Lee put his name in last time. The reason he didn't put it in this time was because he thought Darcy would be the one. The retirees wanted Darcy. If they had not wanted Darcy, a lot of other people might have put their name in. I really think this procedure
No, I
is
think
very, very bad.
I think Mr. Smith's advice then covers what you said. Consider Darcy in nomination and vote on whether you want Darcy.
Let's vote on Darcy.
Yeah,
And if this
I think
board,
that solves the
if
problem.
this board feels that she's a good fit for the board, then she will be nominated. If she's not a good fit for the board, we'll look for somebody else. And if this gentleman wants to be on the board, let him put his name on it.
When you say nominated, or do you mean nominated or
Means
elected?
selected.
Selected, okay. So I think that, and that, you all get to vote on Darcy then, if you like, to what I've said. And what Mr. Smith has suggested is that the first vote be considered that Darcy is a nomination, because that's what the retirees wanted. And now the 3 members of the board get to vote on whether or not to elect Darcy. That will work. That will be a decent way of doing it, if you prefer to do it that way.
Go ahead.
Since we've sort of discombobulated this whole procedure, from what everybody understood from the league, why don't we start all over, have the league send out another notice, and start all over so everybody will see it being as more fair, rather than voting today.
Now, that could be a motion, correct? Is there any issue, would there be any prohibition to that?
I don't believe so.
No, I don't.
Okay, you can make that a motion then if you'd like.
I'd like to make an motion.
So the motion would be to table
Table
the
the
election
election
and solicit nominations.
Yes.
And you all get to vote on that.
Right, on this motion. All right, is there a second to this motion? No second? Okay, motion fails, motion dies. Okay, so, as I understand it now, the 3 will vote on whether to elect nominee Darcy Siegel to the position.
Yes.
Okay. If that fails, then someone can then nominate another member,
Yes.
and it would be from the 3?
Yes. Only the 3 get to nominate and vote.
Okay. Okay. All right, so of the 3, all in favor of...
I think, would you not want a motion and a second to vote on whether Darcy would become the new member? or would you just vote?
I would propose that since she went through the process and her name is on the list,
Yeah.
that if there's any sentiment here to appoint Darcy Siegel, then make a motion.
Is that consistent with you then? So
Yeah.
now she's not considered nominated at this point. Someone has to make a motion to nominate retiree Darcy Siegel.
Well, yeah, I guess what I understood Jose to say before is, since Darcy has indicated her desire to do it,
Right.
I had understood him to say, maybe I misunderstood, let's vote on whether to accept Darcy or not. If you vote accepting Darcy, we're done. If you vote not to accept Darcy, then somebody else can be elected. And I think either way you do it is fine. Okay?
So just straight vote? but not-
Straight vote, I think, would be
Okay.
fine, and I think that fits in with what.
I would accept what you just
Yeah,
said.
So a straight vote on whether to appoint or accept the nominee of Darcy Siegel. All right, so everybody,
No, it will be to select her for the board, just to
Gotcha.
be clear.
okay. So all those in favor, right?
No, somebody
One
has to
on
make
one.
a motion first.
So is there a motion to appoint retiree Darcy Siegel to the board? No. Okay.
I make a motion that we appoint Gil Rosenkopf as a retiree member of this board.
I second the motion.
Okay, so that Gil Rosenkopf has a first and a second. The three of us will vote on whether to accept Gil Rosenkopf as nominated onto the Management Pension Board. All those in favor say aye. Aye. Any opposed? I guess not. So Mr. Gil Rosenkopf is now on the Management Pension Board. That is correct as we see it?
Yeah, we'll reach out to him and
Fantastic.
send the information and
Okay.
Congratulations to Gil.
There's a second spot, active member Ms. Barbara Trinka, who I'm assuming has been nominated.
she has been nominated on the list, so you would just vote as to whether or not to accept that nomination.
And
elect
that's the
her.
three on the election, the three vote? Okay.
Correct.
We don't need a motion, it's just a all in favor. All right. Okay. So on the vote to continue Barbara Trinka's position on the Management Pension Board, all in favor say aye. Or
Aye.
any opposed? Okay. So she's elected. Congratulations to the two. Moving on. Congratulations. Welcome back.
Can do without you.
All right, so now back to the agenda. On the draft minutes of March 25th, any comments? Entertain a motion to approve or accept.
Move to approve minutes.
Okay. Any other issues or discussions? All in favor say aye. Aye. Any opposed? Okay, that's moved. Ratification of invoices for payment. Invoices total, was it $18,815.43? I have that right? Any discussions, questions, comments, or commentation? Commentary? No. Okay, motion to approve, anybody?
Move to approve.
Is there a second? All in favor say aye.
Aye.
Any opposed? Okay, that's on its way. Lump sum distributions. Did those two make it in time? Let me see. So we have two, right?
Correct.
Mr. Carlos Guerrera and Rajesh Sharma?
Page 22 of the packet.
Correct. So we've got lump sum payments of $2,201, 0 pennies. Any issues? Motion to approve, anybody? Comments? Okay. Go ahead.
I apologize. It says the interest.
Correct.
Can you explain like annual interest, effective interest, or like
Employees receive interest
Okay.
on their employee contributions when they're returned to them.
Oh.
So that's just the interest calculation. And we just use a simple interest calculation.
Oh, so I apologize. That's in the dollar form. Thank you. I'm fine.
Oh, yeah. No, we didn't give them
Oh,
6.22%.
gotcha. Oh, okay.
It was $6.22.
Yes, I was like, oh, 6%.
Okay, this is entitled.
Okay, is there
I
a motion
apologize, I'm
to
back on
approve the 2,201 lump sum distribution.
Move to approve.
Any second?
Second.
All right. Discussions, questions? All in favor say aye.
Aye.
Any opposed? Lump sum payments are done. Investment performance. Yes, Mr. Shimon.
Sure. If you'll turn to page 34 of your packet. So this is for the quarter ending March 31st. For the quarter, the fund was up 2.44%, about 25 basis points over the index. The index was up about 2.16, more or less right in line with the index. And also about 20 basis points ahead of both of our median manager indexes that we kind of look at what other pension funds are doing. In the quarter, the broad market bond fund produced a 1.3% positive return. So for the first 6 months, the bond funds returned a little over 3. On the other bond fund, we have the Core Plus. That's the one that is a little more international. They, for the first half of the year, have been negative about 22 basis points. But if you look at the index right below that, the index is down over 3%. So our manager has done a fantastic job, albeit it's a negative overall number. They've done a really good job at protecting the portfolio. And in fact, last quarter, they were up 1.3, where the index was down 1.89. So almost a 3% outperformance in one quarter in the bond fund. And that a lot of that was primarily due to the dollar. The dollar got really strong early in the year. And so those companies that were trying to convert back to dollars were having some difficulties. The high-quality growth portfolio was about a little over 0.5% positive when the index was up over 3.8. Obviously, a tremendous underperformance in that portfolio. We've had some discussions with Atlantic Capital, the manager that manages that portfolio behind the scenes over the last few months. And as of last Monday, they actually terminated one of the 2 portfolio managers on that portfolio, hired a new portfolio manager, and elevated some of their analysts up to portfolio manager levels. So they've recognized that they've had some struggles in that portfolio and have made some changes. We will give them time to see how those changes play out, but that's sort of our fund we're watching right now. Is sort of something that concerns us. We're not overly concerned right now, but we're concerned about the performance.
Okay.
Did you have a question?
Is it possible that we can also get a background on the investment?
Yes. I can put that in the next packet. The value portfolio was up about 0.6% versus the index down about 0.75%. And for the year, they're about 1% above their index. They're doing a very good job. But the index fund, which is called our Russell 1000 Enhanced Index, has had a really good 6 months. It's up over 3% over the index at 9% versus the index at 6 point. Yeah, I lost it. Some of these I can't see.
9%'s the 1 year, right?
That's only 6 months. So that's fiscal year to date, that second column. The 1 year number, they're up over 14.5 versus the index at 12.7. And so they've done a really good job. This manager tries to manage exactly to the index, but they basically, it's what's called a quant manager. They just use math to figure out what they buy and sell. They really could care less what the company is that they're buying and selling. And so they're just using math to try to figure out when things are going to go up and down and sell and buy. And they've done a very good job. So overall in the large cap space, and this is why we have that bottom line there that says large cap equity and the S&P 500, because that takes all of our large cap and says, by having value, by having growth and having this index, are we doing better than the S&P by itself, which is the big large company index? And so, over the first part, we're up a little over 1%, but on the 1 year number, we're down a little bit. And so, these numbers move around, but certainly over the last 6 months, our philosophy has produced a little bit higher return than just being in the S&P. The small cap fund continues to do extremely well. It was up 6% last quarter, over 14% fiscal year to date. And then the international manager was up 5%. Index was up 3.6. Year to date, fiscal year to date, they're up about 2.78 versus the index down 36 basis points. And if you remember, this is the manager we were having some issues with, or the portfolio. We fired this manager last year. So this 6 months, this fiscal year to date, is all the new manager, and they've done an excellent job since we've hired them, which certainly is what we like to see when we hire somebody. But having said that, we're up 5.2 as of March 31st. The market went up, the market went way back down, the market came back up. It was down again on Friday a little bit. My guess is we're probably still right in this 5.5% positive for the fiscal year. But we'll see when the reports come out at the end of June, where we end up. Still got about 2 weeks left, before the end of the quarter. But the market's been real volatile the last couple of months. So that's where we're at investment-wise. If anybody has any questions, I'd be happy to answer them.
So for the September 30th fiscal year to date, we're at 521,
Yes.
and the target was 524.
Yeah, so 3/100ths of
Right.
of 1% off. So pretty much right in line with the target index.
And
But more importantly, ahead of those other managers at the bottom. So
that was the 55%. That
yeah,
one?
so those are plans that have 55 to 70% in stocks, and then we have another one that's a little bit lower, 40 to 55.
Right.
We just put them on there to kind of see, does taking that risk of being, is it paying off? Obviously, the higher equity has paid off because their number is at 4.42. But interestingly, our high quality nature of what we hold is doing better than the average pension fund across the country, because there's been some shocks and some things going on in the last 6 months with markets. Our high quality performs well in those markets. People, when things get a little rocky, they want high quality securities to own, and that makes what we own more valuable because we already own it when they want it. So,
Very good.
but for that same reason, when people like to take a lot of risk and buy junk, we're going to do bad. That's just the nature of what we do, and we kind of understand those cycles come and go, and so that's where we're at.
Can I just give you my thinking, and it may be, I may be a contrarian here. This would be a great portfolio for somebody in his 50s. 60% equity, 40% bonds. Somebody 65 or older might want to see more of a 50-50 split. My own personal opinion from having spoken to a lot of folks in your industry. Why would a pension fund, which is supposed to go on indefinitely, why would we want to be 40%, almost 40% in fixed income, especially with interest rates being 2.5 for the 10-year bond? Why would we not want to take a greater position in equities that over the last 100 years have outperformed fixed income? Just a philosophical thought. What do you think of that?
You can. This board has the ability to move into our 70% stock portfolio or potentially go higher. In theory, the higher the stock percentage, the higher the volatility. When we have those bad years, can the city's budget take a 40% increase in the employee contribution because you had so much in equities? That's something for this board to struggle with. That's what this board decides. I can tell you we have, out of our 55 members, about 7 or 8 of them in the 70-30 portfolio. We have 2 in the 50-50, and all the other members are in the 60-40. That mix, 60-40, based on the consultant's asset allocation modeling, should produce, with at least a 50% probability, a number higher than what your assumed rate of return is in your actuarial valuation. That's sort of just the standard way those things are all set. But that's not to say that you can't, as a board, decide that you want to take on a little more equity risk. That's certainly something that you can do. over the 10-year number, it was only, and I'm going to make this up, but it's not far away, about 18 months ago, that the 70-30s 10-year number crossed our 60-40 portfolio's 10-year number because the losses were so great in 08 and 11 in those portfolios that their long-term numbers were lower than the more conservative portfolio. That's not true the last 18 months because we've had this sort of unprecedented stock market move over the last few years. You know, that's where I would say as a board you have to make a decision whether you believe the likelihood of those double-digit stock market returns over the next 10 years are going to be there. If that's what you believe, then maybe as a board you decide to take on a little more risk to capture more of that. If you believe things may be a little more rocky over the next 10 years, say when, you know, multi-trillions of dollars of U.S. debt have to be refinanced in 2018, and that's going to cause some issues that you might want to be less in the stock market or more in the, those are sort of things up to this board. We look at it as sort of very long term. You know, this plan will go on forever. I don't disagree with what you said about allocations for specific people. I would say, you know, your average 20-year-old probably has 100% in the stock market and doesn't own a single bond, versus your average retiree, which may be 80% in bonds. You know, even the Vanguard Target Retirement Fund, which is, you know, for people already past retirement age, still holds about 30-35% in equities within that mix. You know, that's sort of the best I can tell you is, you know, the likelihoods, and we can certainly give you those asset allocation studies. I know we've had them on the agendas a couple of years ago and looked at that. You know, if you went to the 70-30 portfolio, I can tell you that probability of reaching your goal will be higher. Just based on what you said, historical stock market versus historical bond market returns. I can also tell you, I listened to Jake Bogle, the retired CEO of the Vanguard Group, last week in Philadelphia, and he did not sound very encouraging about the next 10 years. His recommendation is that the pension funds need to get their expected returns down to 5%. You know, certainly a room full of government finance directors, that didn't go over so well and scared them to death because they understand the ramifications of what's going to happen to the contribution rate. So, I mean, that's what we're trying to do. We're trying to give the plan the highest chance of obtaining that goal without having too many shocks to that.
And my response to your comments is basically that that's a conversation we need to have. I'm not suggesting that we go 70-30 at all, because the risk that I want to take in my portfolio may not be the risk that I want to take as a trustee of this pension board, and especially being that we are a municipality and we have to be very, very careful. But I will tell you that over the last 10 years, a 70-30 portfolio has done much better than the returns that I'm seeing here.
Mm-hmm. I mean, I won't disagree. The numbers are the numbers. Yep. But I can tell you the pension plans we had that were in the 70% equity portfolio, you know, the hits that they took on the valuations in 2009 were dramatic compared to the 60-40. So it's a balance between protection on the downside and growth on the upside.
You also have ways to mitigate against the ups and downs and reduce volatility with certain strategies. I don't need to tell you that.
Sure.
But there are ways to mitigate that risk that maybe you and I as individual investors can't do it, but you know, a pension board should be able to lower the volatility exposure.
Again, that's some of the reasons we do that with the high quality nature of the portfolios, helps to lower that volatility. I think maybe it might be something where we would want to have Asset Consulting Group, who is our consultants, come down and meet with you guys and have that discussion.
Do we have an interest to have an asset allocation discussion at a future meeting? Sounds like it
Absolutely.
can't hurt.
I
right?
would like to consider that.
I wanted to hear
yeah.
Trustee Trinka's response, so I agree. I do.
I think systematically the boards should consider their
Routinely.
percentages routinely. And that's not so that we make changes routinely, is that as our fiduciary responsibility is to evaluate that and determine what is best interest for the pension plan long-term. And I think this is a great opportunity to take a look at it again. And I would expect some advice as well, right, from
Yeah.
about those. And I would like to kind of see like a history, let's say our plan, if we did, let's say, have the 70-30 split, but also to know what our options are. Because, I mean, it's one thing to say 60-40, it's another to say 70-30, and I don't know if there's options in between.
So those are our set allocation portfolios. The way that the pension fund works is we have the ability for you as a board to set a unique allocation. The difference is we would charge you about we haven't looked at this in a while because we've never had anybody ever go outside one of the 3 governed portfolios. But in theory, we have a $3,000 additional fee to do that, and that's basically because we got to pay the consultant to do a whole set of separate reports for you because you're different than all the other members. Just throwing that out so that
Right.
you're aware of that.
Right,
But
and-
we have the ability to do that, absolutely.
And I think that's important in our consideration too, because you could say 3,000 monthly or annually, that's a huge difference.
Yeah, it's per year.
Right.
It's
Right.
not-
So-
it's not a huge, given the size of what
Right.
we're talking about. That's not a large amount of money.
Okay. And then also, I would like a list of those cities who are currently in the 70-30 split and possibly references, so we could reach out to them
Okay.
and discuss with them individually,
Sure.
if possible. Any other ideas?
When looking at the, say, a historical perspective on the different splits,
They're all, by the way, all of those are available right now. You can go on our website
Oh, okay,
and
great.
pull all those off. All the 70-30, 50-50, and 60-40 historical stuff is all on the website.
Okay.
You can look at all of it.
when we have the discussion, let's say we're looking at a 10-year historical view of, say, the 70-30 split, would it have an annual picture or slice? So in 10 years ago, so let's just look, not even, let's go 2009, what the return would be for that year and what the contribution would be. So we can kind of look, not just a 10-year summary, but to kind of look at volatility, whether it is whether it is a significant volatility or whether it's not just
Yeah, I mean,
Single
you could
summary.
pick a point certain and say, pull me the October 1 report for every year going back for the last 10 years. And then it would have 1 year, that sort of thing in it, where you could look year by year by year. I don't have a report that sort of breaks that out.
Okay.
Sort of what's the 1 year return at the end of 2011 versus
Right.
the 1 year for the calendar year 2012,
Gotcha.
that sort of, or fiscal years, or however you want to look at it. We have all of that. It's
Right.
just not in a. I mean, I'd end up if you really either having to have somebody in the office
Right,
go
right.
through 100 files and pull it, or somebody
gotcha.
here do that. I can probably get our consultant, given that we have 3 months before the next meeting, to pull something like that for you. Hopefully, try to put them right next to each other.
Okay.
Like I said, I can go in right now, or you can call the office, and Laura can give you, any report from any time period for any of the portfolios. I think we keep the last 5 quarters up on the website.
All right, so we'll have that scheduled then, an allocation review or study. Okay, go ahead.
Yeah, also with that, if we could get like an economic update, we probably will get it with our next quarter in June. But the way that the timing is, that could be 2 months from June. So when we have this analysis, I would like to see the most updated, World
Yeah, I
Economic
mean,
View.
hopefully I will be able to get somebody, either Jason or Patty from Asset Consulting to come, and that's part of their standard talk is they
Big
love to
picture.
give their economic thoughts.
Okay.
That's what those people do. They love that part. So yeah, we'll have that discussion. I think that's a good discussion. So we'll make sure that happens.
Great, thank you. Okay, so we're at new business now, I believe. This is the amendment to the plan document, which starts on what, 22 maybe? My
Yes.
Page numbers are kind of covered. I think
I think it's
22.
page 91.
This is a copy of the new pension document. We send it out every time something's amended in the document. Quite honestly, you're actually going to get another new plan document because the state keeps adding rules. The new amendment that you're going to see at your next meeting isn't going to affect you, but because your document is used not only by your plan but many of our other members, many of which are police and fire plans, the new state law requires us to add a defined contribution plan for every police and fire plan in the state. So the language is required to be in the document by October 1st. So you're going to get a new plan from us.
Okay.
Um,
Well, that was always
but anyway, this is just informational. We're required to send it to the board. It's your document that you're
Okay.
operating under. There's no vote or anything like that needed.
Okay. Let's see. We're at B now, right? Granting access to alternate person for approving distributions and retiree payments.
Right.
This is my
your
request.
Okay.
Right. The invoices and the lump sum payments require specifically Windows Internet Explorer. You can't do it from a mobile device, for a Chromebook, from an Apple, and I don't have many devices that run Windows Internet Explorer. So I'd like to find someone. I even went to the library one time and I couldn't do it through the library. So I'd like to find someone up here who just would, between the two of us, be able to approve invoices and the lump sum distributions, in the chance that I'm not able to. And I could just coordinate through Laura Underwood or your office, obviously, when I just wouldn't be able to get to the operating system that could approve it. So I'm just looking for someone else that
I
might
would be
have-
more than happy to do it with
Okay.
making sure that the board was. I'm more than happy to do that.
Okay, I don't think I need a motion for that, or do I need a motion?
Yeah, because
Okay.
you're granting
Okay.
transactional access
Yeah.
to our system. So I'd feel better if you all made a motion
So-
or to approve that.
Can someone make a motion to have Director Trinka as an alternate approver of the lump sum and lump sum distribution?
Basically, all
and
payments
invoices?
from the system.
I make the motion.
Second.
All right, great. Any other questions or discussions? All in favor, say aye.
Aye.
Any opposed? No. Okay, great. And then C is the liability insurance renewal application. I asked this. Yeah, mine are all messed up now, so.
Page
I think 173.
173 of the packet, yes.
This should be the.
The last
yeah.
2 pages, basically.
Yeah, I got
I asked that to come to the board. That has the one provision about, doesn't it, amendment question. Everybody see that?
Yeah.
Let me borrow yours for a second.
Absolutely. Here we go.
So I wasn't sure, I just wanted to have a discussion openly to the answer for number 8 in terms of merging or making any changes. I don't want to answer that individually without just including everybody, and I wasn't sure. I'm not sure if it's a yes or a no, and I would think just to be safe we would default to possibly or yes, but I wanted just to bring it up to you, Paul, and just get a quick discussion with the board.
Which number were you on?
It's number 8.
Number 8.
It reads, do you intend to terminate or merge any plans within the next 12 months?
And I don't know of any plans, but I just would hate to. We're always with our eyes open toward any reforms or anything like that, and I wouldn't want to say no and then have a problem.
Technically, your answer is no because you
Yeah.
can't do any of those
Okay.
things
Right.
as a board.
Right.
with it. Okay.
That's the simple answer to it. Is
Right, it's
you don't even have the authority to change or merge anything. So
Okay.
your answer as a board would have to be no.
All right. Great.
I agree with that.
Thank you. Perfectly. All right. So then that's clear. I don't think we need a motion or anything, right? You're just moving that forward.
I think you would have a motion to accept your fiduciary liability policy, and I would ask that it further authorizes you to pay the bill.
Okay.
Last year, the bill was about $6,400. And then there's the $100 that the city has to pay for the waiver of recourse, so it covers the board members. Basically, what that means is then the insurance company can't sue you personally,
Right.
and that is well worth $20 a piece.
But do we make a motion for that city expense? Because I don't think we have the. We would just. Move
What
request-
what you can do is request the city
Right.
to pay the waiver of recourse,
Right.
and if they say no, then you all should pay it yourself by
Right.
yourself.
No. Absolutely.
And then you'll only lose $20 a year by being on the board
Right.
instead of breaking even.
Okay, so if I can just kind of put quotation marks around that memo, it was, I think, to renew, to approve the expense, to request the city for the $100 payment. Is there a motion for such?
I would move that we
Agreed.
accept the insurance that is being offered, file the application, answer the question properly, no, and request that the city council pay for the waiver of recourse addendum to the policy.
Is there a second?
Second.
All in favor say aye.
Aye.
Any opposed? Okay, excellent.
If you could execute that and email it to Laura, then she'll get it put
Will
in
do.
place.
You got it. Thank you. Okay, reports. Mr. Attorney, I'm
I
sorry.
apologize. I realize I might have some new business,
Okay,
if I may.
okay, go ahead.
This is actually kind of for our attorney. I know there was a discussion at the times that we originally made plan changes through the ordinances to, in some ways, peg the retirement age to the Social Security. And so there has been discussions about changing or increasing the date of the Social Security, and I don't know if that would affect or impact our plans.
Well, as I understand the discussions about the changes to Social Security, I mean, the political discussions, I'm not aware of any
Right.
proposal that has legs at this time, so I'm not.
Right, and so we only get to meet every 3 months,
Yeah.
right? So what I wanted to kind of know is, would that even impact our plan? Is that nothing that we have to worry on the horizon? Is that something we should evaluate as we look at how our ordinance was written?
I'm not aware of, are you aware of a benefit that gets tied to Social Security age? I'm
When
trying
we
to remember.
originally,
Yeah.
when we originally created
Yeah.
the ordinances, for example, let's use myself as an example. Mine was pegged to 67 because
Okay.
that was the Social Security
All right.
age at that time for someone of my age.
Okay.
So what I just want to make sure, maybe we'll just take a view of the language, how it was written, to ensure if there's are changes there, how that might impact our plan, or maybe not at all.
Are you saying your retirement age is based on your Social Security eligibility?
That was originally the discussions on the.
The
In
ordinance
fact, that was,
references
it was
retirement.
referenced in the actuary report, many places.
I don't have the ordinance here. I thought
Oh.
it was an actual age. Did it
Yeah.
say tied to Social Security?
At one point, the actuary evaluation did. So.
Okay.
Okay, so
There was
let's.
something, I'm trying to
Yes,
remember.
there's
But I don't-
something.
there was,
So-
but I don't know if it passed.
So,
is what-
you know what? Why don't we just come back with that
Yeah.
Yeah.
for the next
So
meeting?
that'll be kind of an action item for next
Yeah.
time.
Yeah, and I think what we did, if I'm not mistaken, is pegged it to if you were born on or after a particular year, 1938. So I remember there was a discussion. I'm not sure if we did it. I think that's something just we can keep in mind. The idea of Social Security age changing prior to the 2016 election in reality is it's just not going to happen, I don't think. There is no real move to have that happen between now and the election. Things could change after the election, but
Right, and I
Yeah.
actually agree with that statement.
Yeah.
What I just want to make sure is that our language won't end up binding us in some way to consider.
Okay.
Gotcha.
One more item, and I realized I had marked it on my notes, but I didn't put a little sticky, so I saw it towards the end, which is the last time we were discussing about the interest for those who kept their contributions into the plan, about the 3%. I haven't had any discussions on it. I don't know if there's anything new. The last meeting we had kind of talked about coming with a formal policy.
Yeah,
Maybe
and
that's not necessary.
yeah.
I don't know.
well, we prepared one, and I'll
Okay.
email it to you because I didn't bring copies. I
Okay,
apologize.
that's okay. Okay, so we can put that on the agenda for next.
Yeah, just send it to Laura, and we'll get it on the agenda.
Okay, great. That's
Thank
it.
you.
Thank you.
Thank you very
appreciate
much for that note. Yes, thanks. Okay. Attorney reports.
Yeah, I think there's one thing that's really joint between Paul and I, and that's the new legislation. And Paul, I'm sure you have a uniform way you're dealing with it. So I think it'd be best, and we'll both discuss it. But if Paul starts, I think it'd be.
Yeah, we still have to comply. I should rephrase that. We finally have to comply with the law that was passed in 2013, with some disclosure information for all of our pension plans. We have built all the websites. I was talking earlier. They will be released out on Friday, so we'll send a link to all of our members. The city will have to put that link on its website. But then we will house all the information, the valuation, your last audit, the things that are required. The other thing that's new in legislation is at your next meeting, we will bring you a budget. This board will have to pass a budget, an administrative budget, so it won't include things like contributions and distributions and payments to employees. It's strictly an operating budget, legal fees, administrative fees, trustee travel, those types of things. We'll look back, figure out what the actuary is using, make sure the numbers are all right, but we're going to put together a template. We're still trying to work with the Division of Retirement. They asked for a Q&A for questions last week. Hopefully sometime next week they'll put the A part of the Qs up online, and we'll know a little bit more about what it is they want, because one part of the law sort of says you have to audit all these items and put that online, but then the budget piece doesn't exactly match the items that you're supposed to have the back-end history for. So there's a little bit here going on there. The division had a conference last week or the week before. They really didn't give us anything clear. But we'll have that on the next item. That will have to be filed with the city council. Our idea is once you pass that budget, we will send a certified return receipt letter to the city manager with that budget. And that will be the extent of your required filing it with this plan sponsor.
You said it had to be accepted by the city council?
It does not have to be accepted
Okay.
by the city council. That was one of the sort of early thoughts about it, but after some of the lobbyists who were involved in the bill got involved in it, basically there was a requirement in one of the earlier bills that it went to city council. The legislature stripped that requirement out of the bill before passing it, clearly showing the legislative intent was not to have the city council adopt this as a budget, because it would create a million problems if the city council had some oversight, but then the other statutes give the board complete authority, so basically it's an informational item. It's kind of like the valuation.
Yep.
We send it to the city has a copy of it. If you have to amend it sometime during the year, we'll have to send the amended copy to the city. So we're basically going to take what your expenses have been, add 10 or 20%, whatever makes sense, and then you guys can change it from there. But we'll try to give you a good template to start from.
Sounds good.
So I don't know if you've got any more.
Anything
on
else
any-
for the attorney's report?
That's,
Okay.
yeah, and the issue about if I could just very briefly, the issue about approval by the city council, it's important that got taken out because it just created a real problem on a fiduciary duty. If you tell people they're fiduciaries and they're ultimately responsible for the operation of the plan, and then say to them, but you can't decide,
How much
where
you
to
spend.
spend the money, that would it just wouldn't work. So I think that this was a compromise that everybody felt they could live with.
Understood. Excellent.
I'm sorry, I have a question. I'm failing to see the point of it. And maybe I'm missing, and I only ask that because I'm afraid that maybe I'm missing something.
So one of the required informational items is, we did GASB 6768, right?
Okay.
Which was some new disclosures for pension funds. Our legislature decided that they knew better than GASB. So they took GASB, but then they tweaked a bunch of things and said, we want you to do this, but with this scenario, or using this assumption. The purpose of this report is to make the plans look at a lower funded level than they are. It is only informational. It has no bearing, this report, on what you contribute. It doesn't change your contribution rate or anything like that. It is just an informational item that has two purposes. The actuaries that do all the business in the state of Florida have been given a login to the division's website, and they will upload this information directly to the division's website. They will then also, he's going to create sort of a visual, because that's basically just a string of numbers they're going to put into the site. And it's designed for the division to create reports on health of plans, but not the actual health based on the valuation that you use for funding, health based on this new assumption that the legislature came up with as to what they think. But something like, here's a good example. Run all of the information, but instead of using your assumption rate, use 2% below. And then publish that information as if that's your funded status on your city website. That would be one of the items. Another item that we're required to do is to take the assets you currently have on hand, pretend that you will never earn an investment dollar, and that the city will never put another dollar, nor will the employees put another dollar, but take all the liabilities for everybody in the plan, project out what that is, come back to a present value number, and then see how many months it takes for you to run out of money.
And if I might,
I mean, there's no purpose to that.
Right. Well, I was
Well,
actually, my thinking was specifically on the budget.
Yep.
But I understand.
But in general,
Yeah.
these are just, it's transparency.
Well, because the board is approving the expenses.
Yeah.
And so what we're saying is if the board needs to spend more than the budget, the board has to approve, but they have to approve the expenses anyway.
Yeah.
So I'm sorry.
Uh-huh.
well,
I don't, what the
But it's-
legislature
I
does
mean-
does not have to make
well,
sense.
yeah.
Yes, please.
Well, I agree with that. Yeah. Two things, if I might add. I mean,
Okay.
the first one that Paul was talking about, yes, why? I mean, there's a view that some people subscribe to that this first report with the 2% less and when you're going to run out of money is designed to make plans look worse than they are. So, for instance, if whenever the date is we're going to run out of money, if no more money goes in, which will never happen, by the way, because the law prevents no
We're
more money
required in the law
going
to
in.
put the contributions in.
Yeah, you're required by law to put them in. So if, let's just say it was 2021, and I'm not sure, I can see a headline in a newspaper, for instance, City of North Miami Beach, and I'm just using, or whatever city, not being able to pay pension benefits in 2021. And that's just not true. It is just not true because more money has to go in. An example somebody gave me of just how clear this is, that you go in to buy a new car, and you say, how long will this, it's an $80,000 car. You figure, I'm getting 175,000 miles out of it at least. How long will this car last? Oh, about 430 miles. Well, what do you mean? Well, there's going to be no more gas in it after 430 miles. And that's what they're asking us to tell. And there's a bunch of things like that. The 2% under, I've suggested, and I don't know if we made the decision here to also report it 2% over. If you're going to do a stress test under, do a stress test over. And the bankers on my plans all tell me that that's what they do. When they're required to run stress tests showing a worst case scenario, they also run stress tests showing a better case scenario. Because the 2% will be very significant.
And we have that
Yeah, I think we've
already
seen
in
it right.
evaluation.
Yeah,
On
we've
the
seen
third
that,
page of
yeah.
Evaluation,
Yeah.
there's that line that
Right,
says,
barcode.
here's what the rate will do if you make 2%
Yep.
below or above.
Now-
So we're already
Yeah.
doing that, but we're not. The other part to this is we're not going to print this out and give you a copy of it. If you want to see a copy of this, you're going to have to go to your plan website and pull it off. Literally, it is so useless, we're not printing it and putting it in your book.
On the expense side, I'm a little less skeptical. I mean, I do think it's transparency that's reporting something real. How much have you spent? How much
Right.
do you plan to spend? And I think there could be reasons for that. I mean, historically, and it's not the case since 2008 or really 2001, 2002, when contributions went up because of the large losses. But historically, there have been a number of municipalities, I'm not saying about North Miami Beach, that have not paid careful attention to the pension plan. And then all of a sudden, that everybody was making money during the 90s, contributions rates were low. And then all of a sudden, the market went down, rates went high, and then we had, property values going down. So cities have been, as a whole, throughout the state, paying more attention to the pension plans. And I think this is just a way of making sure that they have this report so that they can't say you can find that. I mean, it's in our actuarial valuation expense budget, but it's making sure that people are aware that to carry on the business of making money, paying benefits, doing all the things, it costs money to do that, and how much is it? And is it a reasonable amount for the amount of money that's in the plan? So I think that one makes some sense to me.
And then the only other thing I will add is the legislature and the governor also signed a bill that will actually impact you, dollar-wise, the city. And that is we are going to be forced now and forever forward to use the FRS mortality tables. I can tell you in conversations with Chuck that we don't know what the FRS mortality tables are. There are 3 of them. They're blended in a proprietary manner inside the FRS. Hopefully, they will promulgate those tables out for the actuaries to use. We have an idea of what's in them, but the actuaries just don't know for sure. So it's very hard to say what the impacts were. The league asked the governor to veto that bill. He signed it within 4 minutes of receiving them that day, with no consideration for that. So we have yet another regulation passed by Tallahassee forcing us to do something a different way.
Okay.
So more to come next year's valuation on that. We'll see what the cost is.
Anything else, Mr. Attorney?
That's it.
Okay. Chairman, I just want to recap some of the items I either have outstanding or I think that came forward at the next meeting, or otherwise a future meeting. We'll have the asset allocation discussion for our investment portfolio, right?
Mm-hmm.
We'll discuss the renewal of the retirement age versus the Social Security age in our ordinance. I'll execute the liability renewal. We will have the resolution for the members or no longer members, their contributions that are kept in the plan. I'm assuming someone will contact Ms. Siegel and Mr. Rosenkopf.
Yes.
And is it at the next board meeting we'll do some sort of organization for chairman, secretary, and so forth? Will that be done at the next meeting? Is that how we do it?
I think we do it at the December meeting.
Okay.
I mean, I think we'll get with
long as we
Ron's
organize that.
office and make sure, but I think we do that. Yeah, we do it at a certain point, and I think
Okay.
it's like December to take effect the March meeting or something like that. But we'll double check all that for you.
Okay. Are there any other action items or?
I just have a couple things whenever you're ready for
Yep.
me.
Well, let's see. We've got the secretary's report. So that's all I wanted to bring forward. If Laura could just kind of make a note of those action items, make sure those of us are completing those. So secretary's report.
Yeah, she'll get you the logins and then
Thank you.
walk you through how to use it and all that stuff.
Great.
All right, and administrator's report.
At one of the last meetings, or maybe the last meeting, the board had asked about terminated employees with contributions that were still in the fund. This didn't get in your book, but currently there is $71,000 of monies that are sitting out there between the following people: London Bonner, Jose Delgado, Andrew, is it Freeman, and Maria Santovina. So we have sent letters to these people. Laura did send another set of letters after the last meeting to all of them again. The Maria one, she says she spoke to many times and emailed the paperwork. We just haven't received any of their paperwork back. So we've contacted them. We've told them they have assets that they can get out of the plan. They have not responded.
So at this point, those dollars are having the interest applied.
The
to
interest
them.
is done. So they're not earning any more interest.
Oh, they're not.
There's
Okay.
no value to them leaving the money in the
Okay.
fund. You know, it might be a good idea, right? If you could pay them 3% interest.
Yeah, that's what I was
for
thinking.
many
If
years.
it's risk-free for 3%, that
Yeah,
might
the
be part
interest
of their
stops at date
portfolio.
of termination.
Okay.
So the amount is not increasing. It is just sitting there as that amount, and then whenever they contact us, that's the amount they'll get. So
Okay.
and they range from about a high of Maria at $29,000 to Andrews is about 3,800, and then the other two are about 20 piece. So
Okay, I
hopefully
guess
they'll
those-
contact us and we'll get them their money. But
Okay.
at the end of the day, until they fill out the paperwork, we can't really do anything. There's 4 of them, yes.
Okay. Let's see. Anything else?
That's all I have.
Okay, let's see. The next meeting, September 3rd and December 3rd at 9 a.m. Does that sound right? And,
And just
know
for your
that-
knowledge, Labor Day is the next week.
okay, good. Thank you. September 3rd. Yes, okay. And so that's already been sent to our calendars. So if anyone doesn't have it, let Laura know. She did put it on our Outlook calendars. Okay, public comments. I'm assuming there's no public comments since there's no one in the audience. Anything else for the good of all? Nothing? Nothing? All right. Motion to adjourn, perhaps? Anybody? Can I have one? All right. We're adjourned. Second? We're done. Thank you very much. We'll close the meeting at 10:12 a.m. Next meeting, September 3rd, 9 a.m. Bye-bye.